Ratio analysis means one of the important topics of CIB. Roughly you'll get 12 to 15 marks on ratio analysis. One or two case studies and then objective questions. Okay. So what is the schedule for today? Types of ratios, ratio analysis, case studies and objective questions. So it's an action packed half an hour. Watch till the end. So let's start. Before starting, I'll say download Adda 24/7 app on your mobile. Also join our Officers Adda 24/7 YouTube channel. On this app, you'll get the current affairs, job alerts, exam notifications, all the study materials for CIB, video lectures, notes, you name it, you have it. Okay. So ratio analysis. Here there are two types of ratios. I've covered this already in one of my earlier videos. It's a recap for that. Okay. Ratio, traditional balance sheet, P&L and composite ratio. This traditional balance sheet means what? Current asset, current ratio, current asset upon current liabilities, like that one. Okay, which are only related to balance sheet. P&L means it's only related to P&L, debtors turnover ratio, creditors turnover ratio, all those ratios. Okay. See here, that's why I'm saying it's already covered. So it's just a recap. Main part for today's lecture is this case studies. Okay, and composite is a mixture. Now functional ratios, again there are three types of functional ratios: profitability, turnover and solvency. 5 for profitability, 3 for turnover and 2 for solvency. Okay. In profitability we have 5 ratios. These are the 5 ratios: operating ratio, EPS, PE ratio, gross profit and net profit ratio. In turnover we have again 3: inventory turnover, debtor turnover and debtor period. See here, I am not covering this again because this is already covered. It's just an analysis and what is the segregation of ratios. Okay. Solvencies. Solvency ratio is of two types: short term and long term. This you get many a times exams. In exam you will get a question on solvency. Okay. Current and liquid, DSCR and ICR. Long term ratio, debt equity and fixed asset. Okay. So let's move on to the case study. Importantly, before going here, this is the June 20th. On June 20th, we are starting with a new 150 plus 150 case studies batch on ABM, BFM and retail. Remember, ABM and BFM, you have 12 case studies each. Okay, in each topic, in each subject. Okay, so roughly 5 marks each, so 60 marks for case studies only. Follow this case studies batch very sincerely. Okay, more on this later. You can read this 20 hours of two-way interactive classes specially designed for CIB July 22 exam master revision batch for last minute preparation. Okay, so join. How to use this code I'll tell you at the later time. Okay, just now at the end of the session I'll tell you. So let's start with the case, because case is very important. Compute the ratios: liquid ratio, fixed asset, debt equity and current ratio. And what is given? Equity share capital is given as 15 lakhs, fixed assets are given as 14 lakhs, reserve funds are 1 lakh, stock is 5 lakhs, debentures are 3 lakhs, 3 or 30, yeah, 3 lakhs. Okay, debtors are 2 lakhs, OD is 1 lakh, cash is 1 lakh and creditors are 2 lakh. Now what have we to find out? Liquid ratio. What is the formula for liquid ratio? Everyone, fast. What is the formula for liquid ratio? Liquid asset upon current liabilities. Find it yourself fast. Tell me what is the answer you are getting. Get it, check it from here. Okay, what is the answer you are getting? Are you getting 1 or 1.5? Okay, 1 or 1.5. Fast, 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 fast. 1 or 1.5. Type fast. Okay, what is the formula for liquid assets? Liquid ratio, liquid asset upon current liabilities. What are liquid assets? Say this over here: debtors and cash. These are the two liquid assets. Okay, so liquid asset upon what is the total liquid asset then? 2 lakh plus 1 lakh, 3 lakh. Okay, now what are the current liabilities then? Current liabilities means creditors, and next is what? This OD, right? OD. So this is again the current liability. 2 plus 1, 3, right? 3 lakhs. So now it's easy. Liquid ratio is what? Liquid asset 3 lakh upon current liabilities 3 lakh. So it's 1. Okay, that is the answer. Got the point? Next, FA ratio, fixed asset. Fixed asset ratio is what? Fixed asset upon long term funds. Okay, fixed asset means what? Okay, what is given as fixed asset over here? See this, 14 lakhs. Long term funds means what? All long term funds, whichever you have taken from outside bank and whichever you have taken from your net worth. Okay, so what is there over here? Let's find out. Creditors, is it a part of long term? No. Cash? No. OD? No. These are all current liabilities. This is current liability, this is current liability, this is current asset, this is debtor is a current asset. Current or liquid you can call it. Okay, liquid asset is a part of current asset only. Remember this. Okay, Then debentures, yeah, this is a long term liability, right? Then stock means this is the current asset again, okay. Reserve fund, yes, long term liability inside one for of the owner, okay. Fixed asset, yeah, that is 14 lakhs. Equity share capital, that is again a long term liability, okay. So what are the long term liabilities now? 15 plus 1 plus 3, okay. 15 plus 1 16 plus 3 19. Say this, 15 plus 1 plus 3 equals to 19 lakhs. So fixed asset, what is the long term funds? 19 lakhs. What are the fixed asset? 14 lakhs. So 14 upon 19.73. So is this a good sign or bad sign? Fixed assets are 14 lakhs and this long term funds are 19 lakhs. So where have these 5 lakhs gone? 19 minus 14 is 5 lakhs. 5 lakhs are extra. Where have they gone? They have gone into current assets. So it's a good sign. Whenever any fixed asset or long term liability goes into purchasing of current assets, and specifically net worth part, if net worth part goes into purchasing of current asset, it's the good sign that the businessman is using his own money for purchasing the current asset. He is involved in the business, okay. Next, debt equity ratio is what? Long term debt upon owner's capital. And already we have seen this now. Long term debt is what? Debentures, we have got it 3 lakhs, and then capital we have this 15 lakhs, right? And then what? Reserves we have this 1 lakh. See this over here, see this reserve fund 1 lakh, capital share 15 lakhs. So outside is what? Debentures 3 lakhs. Inside owner's fund is how much? 15 plus 1 16, okay. So that much you know now. So 15 plus 1 16, this you got it over here. Then debt equity is what? Outside loan 3 lakh, debentures upon 16, so 3 upon 16 is 0.18. So it's a good sign. This person is having own fund 16 lakhs and outside loan as 3 lakh long term loan. So it's a good sign. Own funds are huge, okay. Now last part remaining is this current ratio, I think so, which is not solved. Current ratio is very simple. What is the formula for current ratio? I'll write it over here itself, okay. Current ratio is what? CR equals to current asset upon current liabilities. What are the current assets? Let's find out over here. See this, whatever are the liquid assets will come in the current assets also. So I'll start writing 2 lakhs, okay. I'll write from below, okay. Creditors 2 lakhs, so 2 lakhs current asset, okay, plus what? Cash 1 lakh current asset, okay. Then OD current liability, current asset upon current liability, will start writing denominator also, okay. OD will come under this 1 lakh, okay, 1 lakh OD. Debtors are 2 lakh, these are part of liquid, so it can be a part of current asset also, 2 lakh, okay. Then what? Debentures, no. Stock is 5 lakhs, it's a current asset, so 5 lakhs over here, okay, 5 lakhs. Then what? Reserve fund, reserve is a part of net worth, okay, not a part of current, okay. Equity share capital, no. Fixed asset, no. So that's it. Anything more? Nothing. Creditors is there, yeah, that was remaining. Creditors 2 lakh, so 2 lakh creditors over here, this creditors, okay. So 2 lakh plus, what did I take over here? 2 lakh plus 1 lakh creditors, current asset, cash, okay, it was wrong, okay. 2 lakh can be taken, these are creditors, this becomes a part of this current liability, okay. So cash 1 lakh plus 2 lakh as debtors plus 5 lakh as inventory or stock. So that much is it. And 1 lakh over here creditors, and 2 lakh 1 lakh is this OD, and 2 lakh is the creditors, okay. So just add this and you'll get the current ratio. 5 plus 2 7 plus 1 8, 8 upon 3, right? 8 upon 3, something it will be 3 2s are 2.66, 66 roughly current ratio, okay. So that is the answer over here, isn't it? Okay, so this is one case study. Now second, determine the debtors turnover ratio if closing debtors is 40,000, cash sales is 30,000, and what? Cash sales 30,000 is 25% of the total sales, and excess of closing debtors over opening is 20,000, okay. Quite simple one. See this, what is given? Debtor turnover ratio we have to find out. What is the formula for debtor turnover ratio? Credit sales upon average debtors. Remember, credit sales upon average debtors. Now what is the credit sale? What is given over here? Cash sale is 30,000, and that is what? 25% of the total sales. So if cash sales is 25%, what is the credit sale? 75%, okay. So if 100 rupees is my total sale, my cash sale is rupees 25, so 30,000 is 25, so what is 100 then? So 30,000 into 100 upon 25, you get 1,20,000. So this is what now total sales. So cash sale is 30,000. Total sale is 120. So what is my credit sales? Credit sale is 90,000. Now I got the numerator. Now denominator, average debtors. What is asked in about debtors? What is given? See this. Debtors is 40,000 and it is 20,000 above the opening. So closing minus opening is 20,000. 40,000 minus opening equals to 20,000. So opening I've got it 20,000 now. Got this? Closing 40,000 minus opening equals to 20,000. So opening I have to find out 40,000 take on the other side. So we get it 20,000 after adjusting all the signature this plus and minuses. Okay. So now opening is 20,000. Now we have to find the average. Average data is asked. What is the meaning of average? Opening plus closing upon 2. So 20 plus 40 upon 2. So it becomes average is 30. Okay. 20 plus 40, 60, 60 upon 2, 30. So 30 crores. Okay. Or 30 lakhs, whatever that figure is. Okay. 30 lakhs, I think so. 30,000, 30k. Okay. 30,000. And what was this numerator? 90,000. Okay. So what is the DTR? DTR is 90 upon 30, so it is 3 times. Got this point? Everyone revise this video again because this is important case study. Okay. Second one, liquid assets is determined by what? What is liquid asset? Liquid asset means what? Debtor plus cash basically, or current asset minus inventory minus this prepaid expenses. So what is this? Which one is the answer? A, B, C, D. Fast. Which one is the answer? Fast, 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 fast. Yes, A, B, C or D. Type fast in the comment section. In the comment section, I want to see the answers. Fast. A or B or C or D. A, correct? So it's A, simple one, isn't it? A. Because here, liquid assets can be found out in two ways. One, directly at debtor plus cash. And second is, subtract inventory and prepaid expenses from current assets. Then you'll get the liquid assets, okay? Next. If the sales is 10 lakhs, sales return is 50,000. Profit before tax is 2 lakhs. Income tax is 40%. So net profit ratio is okay. Now what is net profit ratio? Net profit ratio means what? What is the meaning of net profit ratio? NPAT, net profit after tax upon net sales. Okay. So what is net profit after tax? What is the net profit given? Before tax is 2 lakhs. Income tax is 40%. So 40% of 2 lakhs is what? 40% of 2 lakhs. Okay. 40% of 1 lakh is 40,000. So 2 lakhs is 80,000. So NPAT is what? 2 lakh minus 80k, right? 80,000, right? So it is 120. NPAT 120 what k I'll write it. Okay. So this is NPAT. I'll write it over here. NPAT, net profit after tax. Okay. So 120k. And what is denominator? Net sales. Net sales means what? 10 lakh minus 50,000 because this is returned. So 9 upon 9 lakh 50,000 minus 50,000 it becomes 950. So into 100 of course because we are finding percentage. So 120 1 lakh 20,000 upon 9 lakh 50,000 into 100. You do the calculations over here. Immediately do it. How many of you are getting the answer as 12.5 or 10? What is the answer you are getting? A or C? Which one? A or C? I may be wrong. Remember. So answer is correct. Type it fast. Yes, A. You need to practice it. Okay. Next. Higher the ratio, more favorable it is. Doesn't stand true for which ratio? Means if any ratio is higher, it is better. Any means what? Out of these four. Okay. So which is the correct one? Okay. Liquid ratio. Liquid ratio means what? Liquid asset upon current liabilities. So it is better if I am having liquid asset more. Liquid asset upon current liabilities. Liquid asset means what? I am having cash more or let's debtors more. Cash. Let's take it cash. Okay. I am having cash more. So it is good. It's good. Isn't it? I'll be more liquid. Net profit ratio. Net profit upon gross sales. Right. So what is net profit ratio? Net profit is what is given? Net profit. Net profit I have already know. Net profit, the more the net profit, the better it is for my business. So this is also true. That the more, the bigger it is, better it is, right? Stock turnover ratio. What is stock turnover ratio? What is the formula for? Write it fast in stock turnover ratio. Okay. What is the stock turnover ratio? Immediately. Okay. It's always better. Okay. Stock turnover ratio. Okay. Upon, say this. What is cost of sales? COS, or we call it cost of sales, we call it, okay? The whole upon average inventory. Average inventory, okay? So always stock turnover ratio, the better it is, the good it is for the business. Why? Because if the turnover is more, it means I am buying and selling more in a year. It means my business is running good. But what about operating ratio? Operating ratio, if it is more, it means it's bad. Why? Because operating ratio is what? Operating cost. Operating cost, okay? Upon profit, okay? Profit you can call it. So if the cost is more, is it better? No, that's why this does not apply to A. Got this point? Given sales is 1,20,000, gross profit is 30,000, the gross profit ratio is what? Oh, simple. Find it fast. Find fast. You do it yourself. Gross profit ratio, gross profit is 30,000. Sales is this. So gross profit ratio. What is gross profit ratio? Gross profit upon net sales. So gross profit is given as 30,000, net sales is given as 1,20,000. Divide it. Okay, into 100, of course. So 25%. Okay. So it's that simple. In ratio analysis, you get such simple problems in exam, but tricky ones. Here, this is simple but tricky. Even this one, simple but tricky, right? This one, simple but tricky, isn't it? Once you know it, it's so easy. But if you don't know it, you are out, isn't it? Similarly over here, liquid assets also. If you know the formula, it's easy. Similarly over here, if you know it, it's easy. That's why I always say the ratio analysis is simple, but you must know the basics, okay? If the selling price is fixed at 25% above the cost, then the gross profit ratio is, now this is again simple but tricky. Selling price is 25% above. So what is, how do you find out selling price of any good? Type fast. How do you find the selling price of any product? Right? Type fast. Cost plus profit equals to selling price. Type fast in the comment section. Cost plus profit equals to selling price. CP plus profit equals to selling price. That is the same rule which we have learned since 8th and 9th standard, right? Cost plus profit equals to selling price. So what is given? Selling price is 25% above the cost price. So selling price is given as 125, cost price is fixed at 100, and profit is 25. Okay, keep it simple always. Okay. So now what am I to find? Gross profit ratio. Gross profit is what? Profit upon sales. So what is profit? 25. What is sales? 125. Right? Selling price. So 25 upon 125 into 100, of course. So it is 20%. So that is the answer. How many of you have got this answer? Type fast. Type yes if you have got this. Type yes, I am checking. Yeah. Okay. Okay. So that's the end of today's session. How to use this code Y432. See this. Go to Adda247. I'll show it over here live. Go to Adda247. Yeah. Over here, I'll go to the site now. On this site, click here. I'm on Adda247. Click on this JAIIB CAIIB. Click on this JAIIB CAIIB. Okay. Click on this CAIIB part. See this. Come down on the front page only. Click on this CAIIB. On this CAIIB, you'll see the batches now. See these batches. Okay. View all. Click on view all. Okay. Once you click on view all, see this 150 case studies batch. Go for that. See the fees is 8799. You can read the remaining details over here. 20 hours of two-way interactive classes specially designed for CAIIB, last minute preparation, 24/7 recorded videos, everything which I have told you, it's same. Now fees 8799. View the offers. Click on this. Okay, put the code Y432. Apply it. Once you apply on this code, see this. See this 6755 is subtracted and the fees is 2029. If you clear CAIIB, what is the increment you are getting? 1300, right? 12 to 1300. So in how many months will you recover this? 2002 months. So remember, this is an investment for lifetime. Go for it as fast as possible. Okay, and I'll see you tomorrow.